Okay, I think we're live. Great. So this is a car, aka TradeSmart Z, and today is what is it, March 2nd, and we're going to be doing a quick analysis over gold. Now, a lot of you guys may have noticed that on Friday, gold made a really large move to the downside, over 500 pips, 300 in like 20 minutes. It was moving. And I just want to go into a little analysis as to why and what to look for next and what is gold most likely looking to do. So first of all, as always, guys, you always want to start on the highest time frame. You want to look at the monthly. You want to look at the monthly because you never want to be in a situation where you're not aware of what the market could potentially do. So first thing we're going to do is we're going to mark off the high that gold actually came to. And the first thing that you'll notice is that actually gold reached a significant area on the monthly time frame. So this last bullish monthly candle is actually a candle where there will be liquidity, or what we call a candle of interest. And they wicked right at the opening of that candle. So we already knew that gold was at a significant area of resistance. And so the move that it did is definitely appropriate. Now we'll just drop down to the weekly. And we can see that, okay, gold didn't break the trend in terms of breaking below a major structure or even breaking the trend, right? It's still above the trend. However, it did start and make a significant move down. But now let's drop down to the daily. So currently, gold did violate this high. It closed below it. And actually earlier just today, at the top of London session, they came and they actually tested this high to the left. Gold actually came there. That was a setup for London session. If you were trading the London reversal, late London, you would have been able to catch that setup from the high. That's where they came, right? Because that's what the market does. When it re-enters the structure, you can anticipate that they'll retest it, right? Now, let's see, coming on the move down, after gold came to that monthly institutional candle, so this is the body that actually hit within the wick, not far from the body, which is fine as well. It took us about 16 hours, and we actually engulfed that previous candle. And if you pay close attention, you can actually see that the market had made a high, but when they broke above that high, they really only gave wicks above it. The candle closes weren't that far off, and the market didn't break and retest and continue up, right? So they just broke the high, and then they came and they engulfed that candle that made the new high. So from that point, the trend was broken for a smaller time frame. But then they worked their way down, and then they formed actually a flat pattern. So this flat pattern is what we call a corrective pattern. And when you see these, you can typically predict which way the market is actually going to go. So this corrective flat pattern is actually an expanded flat. So all that means is that the B wave came slightly below the initial move, and then the C wave took out the A wave. So you just look at it like this: this is A, B, C. Now, one thing that we can notice about that C wave is just like on the monthly, that C wave actually came really close to the last bullish monthly candle. So that wick actually hit the wick of that candle as well. So very strong area. And as you can see, it hit it and then boom, engulfing. And once they engulfed, we can actually go down to the 1 hour and see that the market broke the counter trend line. So now we're making, right, a bearish trend. And of course, once we break that counter trend line again, we're looking for them to break the lows. So they break it, they pull back, do the same thing over and over again. And then the market does come to that last bullish candle, right? Comes to that last bullish candle, wicks it, and then drops. So far we have a nice impulse, a nice correction, and then a large impulse down. Now the question is, and there's two options for gold, is will it actually come here and then go up, or is it actually looking to go down further before doing anything else? Right now, as long as gold is below this 1611 area, I'll definitely be looking for a sell a little bit further. Now, it doesn't necessarily have to absolutely take out this low, but even if it just were to break this low and pull back, uh, that's definitely something I would be looking for as long as they're holding above this point. So let's actually see, what does it look like on the um, 1 hour? What are we looking for? So this here is that last bullish candle before they made the reversal and it got engulfed by this candle here. If we can actually get a move back on gold to this zone, which also lines up with this wick here, kind of would be like a head and shoulders pattern. This would actually be a very solid area for a risk to reward to take the market all the way back down, at least to here, to this demand zone, and then potentially towards the low. So let's just look at like what the risk to reward on a setup like that would be. All right, maybe looking for a stop loss outside of the zone, maybe about 60 pips. And at the least, you're aiming for about 300. At the max, we're probably looking for about 440, 450. So really great risk to reward on this setup. Do we have anything that would make us believe that this setup is possible? I believe so. I believe that earlier today, the market came down far enough to show that it actually is testing the trend. So it didn't absolutely break it, but they came to the exact point where the low was made before they made the high. And coming to that exact point is a really good start off for what we would expect to be a potential head and shoulders, as if they choose to go this high. Now, what can happen is that the market can continue to make lower highs and just break, and then you expect a retest and continuation down, and that's very possible. But for the worst case scenario, if the market actually chooses to work its way up, we can actually anticipate this area as an area to take a sell. Now, if you actually want to reduce your stop loss, you could actually wait for this setup to work its way up, build out your counter trend line. And once the market breaks and retests the counter trend line, you can actually reduce your stop loss by planting a stop loss above that high. And as they pull back, taking that sell down. And this is how you can actually really gain a lot more wealth when it comes down to trading, by finding the same setups with the same risk to reward, but finding the entry that gives you the tighter stop loss, because your risk is always based off of your stop loss. So that's right now my analysis for gold as of right now. If we do get a break above this zone, then that analysis will change. But as long as we're below this area, we're looking for the best possible setups for a sell. So it's two options, and we can just draw them out really quickly. Right? And then we have it moving straight down, continuing the bearish trend, and then working its way down. So this is what we're looking for gold. We are currently under this counter trend line as of right now, so that's really good. But these are the only two ways that I would consider entry points: is the break and the retest, or we get to this optimum pullback level with multiple confirmations there, right? Fibonacci, right between the 61.8 and 70.6. You got resistance from the left. This was also an area I actually caught this sell last night from here straight down, and boom. And that level can still play off again. It can still be significant. But definitely thank you guys for checking in with this video. Just wanted to share this quick analysis with you guys. Definitely subscribe. I'll be doing these analysis videos a lot more, so everybody can plug in. Instagram at tradesmart.z if you found me through another way outside of my Instagram. And if you have any pairs that you would recommend me doing, for a long-term analysis, go ahead and just drop it in the comment section, and just put the pair. And I appreciate you guys. Thanks.